Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a day which is quite quiet for the markets, so the indices are just about consolidating, but a lot of specific stocks are in focus and a lot of queries as well, so we will be discussing that in the course of the next 30-odd minutes. Joining us today, we have Shahina Mukadam as well as Ashish Kyal of Wave Strategy to answer all of your stock queries. Shahina as well as Ashish, welcome to the show. Well, Ashish, let's start by just giving a sense in terms of what your strategy would be on a day where, the markets are just about consolidating and the stock-specific action continues. So sectors that you might like today to take a call on and your call on the Nifty as a whole.
Hi, afternoon to you and all the viewers. If you look at Nifty, I think post a good run-up that we saw over past few days, since 2 days Nifty is consolidating. And I'm optimistic that's a positive sign. We can expect Nifty to possibly reach towards the psychological 25,000 mark. And I'm optimistic it will also touch the lifetime high levels. So the overall trend is bullish. We can expect it to go towards the level of 25,190 on the upside. And on the downside, the support for the index is going to be around 24,690 levels. So as long as 24,690 is concerned, any dips can be used as a buying opportunity for 25,000 followed by 25,190 levels. And Bank Nifty especially should take the lead. So the sector that I'm going to focus on is Bank Nifty because Bank Nifty is still substantially away from the lifetime high levels. It is yet to fill up the gap, and it shows some resilience yesterday. And I think Bank Nifty, there is a potential for it to reach towards the level of 51,900 on the upside. So Bank Nifty should take the charge, and the stocks within the banking space and the IT space. So these are the two sectors that can perform well.
Okay, all right. Well, we do have a couple of queries now, so let's get to that. We have Harshit, who writes to us from Kolkata, holds 42 shares of Paytm, which is bought at an average price of 575. So he's just about sitting on a loss on this one. He wants to know whether to hold or sell. Well, Paytm has seen some amount of recovery. That stock rallied yesterday. The stock was in focus yesterday on account of that big transaction that took place on account of its ticketing business. So it's going to garner around 2,000 odd crores. Vijay Shekhar Sharma has expressed confidence in terms of the turnaround that they want to see in the company as well. Shahina, let's start with you. What would your call be in terms of a long-term perspective on Paytm?
See, I would suggest it could be a good switch from here. The transaction was a good deal for Paytm, 7 times revenues was not bad. At the same time, and the impact also on the profitability, EBITDA levels is going to be about 5-6%. So in terms of overall impact, it's not going to make much difference to Paytm because, it's already running into losses. So I don't think it's going to make too much of difference in terms of profitability. And also the funds that they have raised will be utilized, in my view, to actually build one of the apps that they are talking about, or some technical development in terms of seamless transfer in GIFT City. So yes, that's a positive for the longer term, but we really cannot quantify what it will impact as of now on terms of numbers and balance sheets. What I would prefer is that, the investor can switch. I don't see too much upside. In fact, even a switch to Zomato would look better in my view, because the utilization of funds by Zomato looks to be pretty good. They have surplus funds on the balance sheet, so I would prefer a switch.
Okay, you would prefer a switch. What about the technicals? Ashish, what would you recommend in terms of the technicals for Paytm?
See, if you look at Paytm, I think the stock has not even filled in the big gap that was created. There is absolutely no attempt for it to even go closer to that. So there is a lot of hurdle around 600, 610 levels, and there is no upside potential for the stock that I can see here. There will be a lot of damage minimization that these people will have to do what has happened over the past 1 year, and retailers and then the traders will have that memory in mind. So I'm not optimistic about Paytm. It's better to be out of this stock. This is a good level where you can exit because that's the gap area, and that's also the prior pivot low. So better to be out from here, and maybe the stock can again show a dip towards 450 or maybe lower levels.
Okay, all right. Now we have Vijay Kirti, who writes to us from Mumbai, holds 250 shares of Concor, which is bought at around 1,042. Wants to know what to do, whether to hold or to average his particular holding in Concor. So he's sitting on a loss at this point in time. Currently, the current market price is 994. In terms of the technicals, Ashish, let's toss this over to you. Do you think that there's a further upside that could come through for Concord? Do you think it could reach the buy price or maybe even exceeded any target price and stop loss there?
Yes, if you look at Concord, we can clearly see there has been correction on the downside, but that's an overlapping correction. Overlapping means that there is no intensity of the fall. It has been slowly and steadily moving down, which shows that the major trend or the medium-term trend is still intact on the upside. So I'm optimistic the stock can move towards the level of 1100 above the buy price and much higher from there. So continue to hold on to the stock. On the downside, maintain a stop loss of around 950. As long as 950 is intact, expecting a targets of around 1100 or higher.
Okay, all right. And the fundamentals, Shahina, you know, the net profit rose around 5% in the previous quarter. Or I think around thereabout. I think it was better than that, over 10% Overall, how did you view the Q1 numbers and what would your call be on the stock?
Yes, Ekta, the growth was about 9%, which is pretty sluggish. At the same time, I would agree with the technical view that, while, the stock is consolidating, it would be better to continue to hold as of now. Valuations, about 25 times P, not too expensive for 1 year forward. So I would continue to hold. In terms of business, they are growing. The overall PSU sector is actually seeing some bit of profit booking. But if you're a long-term investor, it makes sense to hold. It's got a decent market share in its own size of business. It's improving its margin potential by streamlining its operations. So it would be a good hold for the longer-term investor.
Okay, all right. Well, the next query is from Ashok Khanna, who writes to us from Noida, who holds 3,200 shares of Netweb Technologies, which he's bought at around 2,299 odd rupees. He's sitting on a profit on that one. He wants to know what to do, whether to hold or sell this particular counter. Well, Netweb has been a listing which a lot of people who probably invested in terms of the IPOs and haven't sold are sitting on phenomenal gains at this point in time. What was the issue price? Around 500 rupees per share. So it's given multi-bagger returns just in a couple of months from the time it listed, around July, August last year. So give us a sense, Ashish, do you have enough to chart the technicals on this one?
Yes, of course, because we have almost a years of data and that shows the uptrend as of now. The stock went and made a low of around 2,200, from where it showed a very strong bounce back again. So overall, hold on to the stock, maintain a stop loss of around 2,400 on the downside, and expect a target of around 2,850.
Okay, all right. Target of around 2,850. And when is that target probably going to be achieved?
We can expect over the period of around 3 to 4 months. So it's not going to be one way, right? There is going to be some kind of a consolidation, some kind of a pattern formation we can expect. But within 3 to 4 months, we can expect that to be achieved.
Okay, all right. And what about you, Shahina, on the fundamentals? Do you think that a lot of the good news is priced in for Netweb Technologies, or does it have more to go from here?
See, for the shorter term, it is looking very expensive. The original investor, you were correct, at 500 rupees if they've invested, it's 5 times that. At the level of 2,200, where it has actually seen that, couple of months back, 1 or 2 months back, those are the levels where a lot of mutual funds actually entered into the stock. This is after the 1 year cooling period exhausted. So at current levels, what I believe is there is going to be some time-wise correction. But given that, I believe that the company is in a very interesting area. It has got this tie-up with NVIDIA for manufacturing of chips. Now, all this is in the future. And in terms of current valuations, it's extremely expensive. If you look at it, on a turnover of about 750 crores, that is last year, the market cap today is about 14,000 crores. So, fundamentally, it looks too expensive, but it's in a good space. If it's a long-term investor, you hold, and if it corrects, you can average your cost.
Okay, all right. If it corrects, you can add or average your cost. But definitely a multi-bagger there. Netweb Technologies, as you can see in the past 12 months, has given returns of over 200 odd %. But we have Porsche Silvan Durai, who writes to us from Mumbai, holds 100 shares of Aadhar Housing Finance, which is bought at around 445 odd rupees. He wants to know the target price to sell this counter. He's sitting on a loss right now. Shahina, over to you on this one first.
Yeah, I would say you can sell. Basically, Blackstone is the big investor over here, and they have actually more than 75% stake even now. So they will be offloading bit of that stake going forward. So this stock is likely to see time-wise correction. It's given a good return from the listing, recent listing. It's up 25%. So I believe there is going to be this stock will be volatile. It's in low cost housing, Uttar Pradesh, in a large way. I would suggest you can exit.
Okay. And what about the technicals on this one, Ashish?
There is not much of a data, I think, but as far as I can see, the stock after touching 480 levels has been forming lower high, lower lows. That shows that the overall trend for the stock is on the sell side, and as per a simple Dow theory. So it's better to be out from here from the stock and invest in some other stocks, something like housing finance, LIC housing finance, something like that is looking much better than being invested into this one.
Okay, all right. So that's on Aadhar Housing Finance. You prefer LIC Housing Finance over it. Well, on that note, we need to take a quick break with the news that the markets are extremely quiet at this point in time. It's a wait and watch ahead of the Jackson Hole meeting. So that's what's taking place at this point. Take a break and be back. Welcome back. Well, a couple of stocks which are managing to see some amount of traction on a week-to-date basis is something like a Godfrey Phillips. It's down today. It's down 3.5% today, but it's gained around 20% this week. Even All Cargo Terminal, that stock is up around 1.3% today, but it's given returns of 15% this week. Even Edelweiss Financial, that stock is at around 98 odd rupees. It's up 15% this week. Poly Medicure, which had a QIP this week, is up around 2 odd percent and gained around 12.5 odd percent for the entire week. So there are a couple of these buzzing counters which one needs to take a note of at this point. But we still have with us Shahina Mukadam and Ashish Kyal to answer all of your stock queries. Well, we have Kaushik Datta, who writes to us from Mumbai, holds 1,000 shares of Mascon Docs, which he's bought at around 382. He's sitting on a fantastic figure there, and he wants to know what to do, whether to hold or sell. You know, this is one of the reasons why the real estate market is also doing well, Shahina, as well as Ashish this year. The kind of gains that people are sitting on specific stocks. Can you give us a sense, Shahina, that, on Mascon Docs, it's been in focus on account of a lot of news pieces this week. But as a long-term perspective, what would your call be? And do you think that the investor should probably take some profits? Kaushik should probably take some profits off the table?
Yeah, Ita, I believe he can take some profits off the table. A couple of reasons. One is because he's got a bit of quality. The price actually is getting a very good appreciation. And also in terms of, if you look at the medium term or maybe a year or year and a half, valuations are expensive. It's about 25 times if you look at it in terms of P 1 year forward, 35 times, and price to book 16 times. But the main reason why I'm giving as a part book of profits is because the government holds 86%. So the chance of coming with an FPO in the medium term is there. You can book part profits now because it is expensive, and then look to re-enter, at some later stage.
Okay, all right. And what about you, Ashish? What's your view on this particular counter?
I completely agree that he has made some substantial return on the stock, and I think nearly 10 times he entered at 352, and the stock is around 4,500 odd levels, and that's tremendous. So I would like to congratulate him for sitting so tight on the stock all the way on the upside. Book partial profit, and I completely agree with you also that that's the reason why the real estate space is also seeing the buzz, because a lot of investments and the profits that you make out of the stock market do get into those real estate properties, and that's why we are seeing the elevated levels over there as well. So overall, in a nutshell, it's better that book partial profits, hold on for the remaining positions, maybe 50% of it, and hold on with a stop loss of around 3,800. As long as the support is intact, we can expect the stock to again reach towards the 6,000 levels on the upside.
Oh, okay, all right. 6,000 levels is your target price. Ashish, by when?
We can expect this stock to move toward the 6,000 level maybe by around 6 months of time. Some kind of a consolidation over here is possible, and post that we should be heading on those levels.
Okay, and since you are talking about real estate, you mentioned that anything that you like on the technicals?
On the technical side, you can clearly see DLF has been a stronger performer in this entire space. We can clearly see that the stock has rallied sharply on the upside. We can clearly see it is consolidating up over past 6 months, but I think the breakout should come on the upside. We can see around a lot of buzz happening actually in Mumbai as well. So I'm optimistic overall. The real estate space should do well. Something like Oberoi Realty can also be a good pick at these levels. You can look for that Mahindra Life space. So these are a few counters you can look forward to. But the DLF stands out, and I think if it manages to break above 900, we can expect it to go towards the level of around 1,200 odd levels over next 6 months to 8 months time.
Okay, all right. Well, now we have Parag, who writes to us from Mumbai, holds 250 shares of Chambal Fertilizers at an average rate of 251. He wants to know whether to hold or sell this particular counter. So Chambal Fertilizers, he's also sitting on a profit at this point in time. Shahina?
I believe we can continue to hold at current levels. The valuations are pretty reasonable. It's about 2.8 times price to book, and the P is below industry average. Monsoons being good, you're likely to see decent numbers coming in for the full year. First quarter also we saw, well, turnover was lower, but that is more on account of lower subsidies, and lower raw material costs. But this is resulting in better EBITDA margins and better EBITDA levels, as well as better profitability. So this is likely to continue on for the full year. I think it's a good hold.
Okay, all right. And technicals, it's done very well, Ashish. It's up over 90 odd % just in the past 1 year. So what would your call be on Chambal Fertilizers?
Yes, absolutely. On technical side, if you look at it, the good part is stock, after having a very sharp run up from around 360 levels to 560, is consolidating in a very tight range. It's not trying to correct price wise, but there is more of a time correction, which shows the strength in the inherent strength in the stock. And if it manages to break above 540, I think the pattern target on the upside can be around 590 odd level. So everything looks on the charts to me, and continue to hold on, maintain a stop loss of around 480, the lower end of the range, and expecting a target of around 590 levels, maybe in 2 months of time.
Okay, 590 odd levels is in the next 2 months odd is what you're recommending, or what you're envisaging. And now we have another query. We have Lalit Kumar, who writes to us from New Delhi. He has 100 shares of Landmark Cars, which he's bought at around 735. So he's sitting on a loss here. And he wants to know what to do, whether he should hold or sell this particular counter. Not done much, Ashish, in the past 1 year odd, it's, sold off around 16% of its market cap. So what would your opinion be on Landmark Cars? Do you see further upside? Do you expect it to get back to above those 700 odd levels?
See, if you look at Landmark Cars, the stock has absolutely not shown any kind of recovery. In fact, the momentum on the downside has only increased post breaking the 740 support, and it formed a low around 545. 30 odd levels, and the volumes are also huge enough with the fall. So that's not a positive sign. The upside volumes are less, but the downside volumes are increasing. Indicates there is a distribution still ongoing. So I would recommend to be out of this stock. Any kind of a pullback, if you can get around 640, 650, use that as an opportunity to be out of this, and maybe invest somewhere else.
Okay, all right. Well, we now have, actually, let's get your opinion as well on Landmark, China. The very poor Q4, quarterly numbers also, which have been reported by the company. So what's your sense?
I totally agree with Ashish. In my view, also, it's an exit at current levels. That is, profits were lower. There's not too much a niche that the company has. So I would say exit.
Okay, you would say exit. Well, we now have Rama, who writes to us from Andhra Pradesh, holds 1,000 shares of RT Industries, which is bought at 750. Wants to know what to do, sitting on a loss on this one as well. Shahina, any view on RT Industries?
No, the valuations are very expensive at current levels also. If you look at EV by EBITDA 27 times. So management has come up with aggressive guidance for the current year. Even if they were able to meet their guidance, which they're talking of about 1,450 to 1,700 crores, I still think the stock is expensive. While the problems are sort of subsiding in terms of pricing, I think this year again is not going to be a great year. So it is better to switch from this expensive stock into some other stock.
Okay, all right. So it's switch from this stock to another stock. And what would your view be on this one, Ashish?
I completely agree with Shahina. The stock on the chart has shown a very sharp decline from that around 740 levels. It went to 600 in just 1 day or 2 days of time, and post that it's just trying to consolidate. So that's really the consolidation after such a sharp fall indicates continuation pattern, and then the breakdown should continue. So I would be very stringent when keeping a stop loss of around 590 levels. If 590 is taken out, then much lower levels around 520 can be also seen. So 590, use that as a stop loss, get a pullback towards that 660 resistance level and get out of this stock.
Okay, all right. So that's on RT Industries. Well, that's the last query that we have for the day. So Ashish as well as Shahina, thank you very much for joining in and taking us through all of those queries. Well, for the market, it is turning out to be a lively session for a lot of stocks. Nykaa seems to be the real stock of the week from the broader markets, up around 18% this week itself. 30% is what it's picked up this year in terms of market cap. But following it closely is even Spark, which is up around 5.5%. It's gained around 6.5% this week. Fortis is doing well. Remember that they will be buying out the PEs in their diagnostic business, Agilus. So Fortis is up around 5% in that particular counter. It's gained around over 30% this year. Interglobe Aviation, Walkhart, Skipper, Easy Trip, all of these stocks are seeing some amount of buying on the upside. So up anywhere between 3 to 5%. Zomato up 2% today, not done much this week. But remember, it's sitting on gains of over 100% on a year-to-date basis. MCure Pharma, which is a recent listing, is at around 390 odd rupees, is gaining around 2% in today's trade. Overall, very quiet day. So the indices, the Nifty is just about higher by around 28 odd points. Sensex is up over 60 odd points. Bank Nifty just about 11 points higher, and the mid cap index flat as well. That's all the time we have in the show. Do remember you can email us your questions. We'll address them with the experts. Closing bell up next.